Welcome back to the Lofty Lenders Homebuyer Education, where we explore tips, tricks, and real life stories that can help you plan for your next home purchase. Whether you're a first time homebuyer, a move up buyer, an investor, or simply here to learn more, you're in the right place. Today's episode's all about navigating the homebuyer process when you are self employed. And trust us, it's not as scary as you might think. Right, Charlie?
Not at all.
Well, so we first want to hop right in and talk a little bit about like what does a self-employed person look like? Is it someone who is only they have to be a business owner? Like, is that the only person that's going to be self-employed, Charlie? Do you have to have like a big massive corporation where you own McDonald's, you're self-employed?
Well, I mean, that definitely qualifies. But I think the fun part you and I have been seeing ever since COVID, you got the side gig that just kept you busy, and a lot of people maintain those and even bumped up to doing that full time. So no, I mean, it could be as little as Mary Kay or doing Uber, Lyft, whatever. So anytime you've got a non-W-2 job, side gig or otherwise, sometimes even a waitress or a waiter, getting those tips, it depends on how the company reports income to you.
That's just it. And that's exactly what I was going to say is the 1099 stuff. And sometimes you think you're a full-time employee, and in actuality, they were just either they're paying you cash or their pay stubs they were sending to you never actually had taxes coming out, and you're actually 1099 W-2.
And that's one of my favorites. The IRS does not say that if you get paid in cash, they don't care. You can have a 100% cash business. You really need to make sure you claim that on your taxes. To each their own. However, the IRS scares me. I do not want audited, and I don't want to get in trouble. So it's a big question mark, and that's knowing what you have is half the battle, and sometimes that's confusing. We can help, and at the same time, getting an accountant and not doing taxes on TurboTax or QuickBooks or anything else that you're trying to file your own. Bookkeeping's great, but sometimes you want some help filing those taxes. Make sure it's right.
And I think there's a common myth out there that getting a loan when you're self-employed is a lot more difficult. It's a lot more challenging. Nobody knows how to help out a self-employed borrower. There's all these myths. I hear from people coming in all the time saying, my income's really weird. My last banker, he told me that I wasn't going to be able to do it until I had 7 years on the job, or just random stuff, because people are so freaked out at looking at tax returns. Have you heard those stories as well?
It's crazy. And I think that's the part that is the most shocking to us, is when you have professionals giving that type of feedback or advice or whatever, because you shouldn't. I mean, don't scare somebody. If you don't know, then just say, you know what, I don't know. Let's bring somebody in that does. But yeah, we see so many lenders that just make it worse. But I think they can't balance their own checkbook well. So how are they going to help you do your own finances and your business decent, let alone doing it well? So finding the professional that knows what they're doing is half the battle.
One of my favorite stories is I had gotten a referral from an agent who the customer had gone to his local bank, and the local bank said, hey, you need to go and have your taxes amended because you're not filing your taxes correctly. So we need you to amend them so that way we can help you get qualified. And the customer said, well, wait a minute, I give my stuff to my CPA. He's always done an amazing job. I don't understand why I need to now change what he's been doing in order to qualify for buying a house. I'm just not really happy with that answer. So he reached out to his agent. His agent passed them back to me, and we were able to use the returns as filed. He has a C Corp, a corporation, as if you will. And so it's a different type of tax return. Not many people see these. We don't see them very often in Iowa because we just don't have as many large corporations that are owned by individuals. But he has the C Corp. He has all the documentation. I asked him, the best thing about self-employed is you get a lot of talking to us because there's always more taxes and more documents that you're needing to provide. But the best part is we know what we're looking for. We're asking for those things because we actually understand your tax returns and we know what you need. And so in this case, I asked him for quite a bit of stuff. He had it all prepared. He had given to his CPA, or his CPA gave it to us. And he was able to buy that dream home, and he closed on it without having to go back and amend his tax returns. And then he has to, pay extra taxes when he amends his returns. And it's one of those things that if they don't understand, instead of saying I don't understand, they recommend you go change. And that's a real struggle for them.
Well, and it's, if the lender is trying to fit you into their box versus having a bigger box, there are a lot of programs out there that allow for more friendly self-employed, but you could have an underwriter that gets a file that doesn't like tax returns. Well, If the borrower is not confident and the loan officer is not confident and the underwriter is not confident, well, that's just a bad mix. And that's, like you said, that's where we see a lot of places that give a poor response or an undesirable response or a denial. They just don't know. And so you can't make someone understand something if they don't know how to do it. And that's where we come into play, where we just try to make sure we know. And if it's something we don't know, we've got the resources to say, hey, here's a niche item. This is unusual. Let's understand it. And we get the CPA on the phone or whoever the professional is and figure out why they did it that way. Because there's a lot of ways the IRS will let you file your taxes.
And I think what brings to mind when you say that is advocating for the customer, right? So there are multiple underwriters that we work with, right? The way our company is set up, we work with different organizations. Each of them has a few different underwriters that are designated for us. And there are times in which the underwriter doesn't come back with what we're anticipating an answer to be. And my favorite thing to do, I'm sorry to the underwriters that are my friends, but my favorite thing to do is to argue and win. And I just love to advocate for the customer. I know when I've spoken with the customer, I've spoken with the CPA, I've spoken with everybody that understands what's going on with this and why they did it this way. And if we can make it make sense, then great. Let's find a way forward. And I love to argue, especially when I know I'm right. When I'm a little uneasy, it's worse. But
I love that. And the same here. It's a game to us, quite honestly. I mean, we're very
a game we want to win, and we're always winning, right? It's not a game that we play around with.
We're not here to have what we thought as correct and the research that we spent time on to be put into the no category. Like that doesn't happen, and it happens by design. If we're not sure, we're going to say we're not sure. We're going to check it out. Once we say we're sure, I don't want to lose. And again, we're out for the consumer benefit, but a lot of this is even like on the easier scale of W-2 with unusual assets or gifts, there's question marks. But on the self-employed, the underwriters are just trying to follow the guidelines. And it's the same across the board. The government wants to make sure no one's lying, cheating, stealing. We can all agree that's a good thing. But they also want to make sure that the consumer's not getting put into a bad position. And that's making sure that you can afford the house, that their cash flow is good, the money and the funds are available. And on self-employed, if you take funds out, a lot of times you're taking money from that business. They want to make sure the business isn't going to be in jeopardy. Just because you got your house, now your business is in trouble. So it's a good idea what they're doing, but it's a completely different way to look at it. And they just want to make sure that everyone is safe. So you're successful in the house as the buyer, and then the system is safe because you're not going to have a foreclosure. So it's the grand scheme, it's all a great idea. It's just there's so many details on self-employed. It's just a different ball of wax.
Absolutely. And I think one other thing we wanted to talk about today is there are so many unique ways to help out self-employed buyers. When it comes to just a traditional mortgage, it's not really that difficult to qualify. There are some certain criteria that we want to make sure that we go over with you to make sure that you understand what you're getting into. If you're going from, hey, I've been working as a roofer as a W-2 for the last 10 years, and now I'm starting up my own roofing company. We've had a couple of those recently. That completely changes. And even if you're going to be making a lot more money, we have to be able to show that you filed those returns. So I know that a lot of people think they're bettering their position, they're bettering their income, they're bettering themselves by starting this or even taking a contract job because I'm guaranteed 12 months. And I feel like with my W-2, I don't feel like I'm necessarily guaranteed. My job might not be safe. So with all those things said, it's good to have those conversations up front. And then on top of that, though, the products out there are some what we call non-QM or unique products out there that can help people. Do you want to talk about that a little bit?
Yeah, and it's gotten a lot more prevalent. There's always been outside-the-box products, and that has typically been with a portfolio-style loan. And it just means that it's going to be that group's money. So it's not the government backing it. So it's kind of like if you or I want to lend our own money, we can make our own rules. You can be as risky as you want. You can be as safe as you want. And those non-QM, like you mentioned, there's ways to do bank statement loans versus doing tax return loans. There's ways to do what's called a debt service ratio or a debt coverage ratio. Those are all going to be based on like an investment property. So there are some niche pieces, but every time you make an exception, you tend to have strings attached. And sometimes those strings are acceptable. Other times, maybe it's higher cost, maybe it's a little bit higher rate. Those might be just fine for a business decision or just convenience and ease. Other times, like we were just saying, we try to start with the vanilla. If we can get you into the vanilla box, you tend to have a little bit of a perk because of the fully fixed rates, typically a little lower. But those niche products can come in very, very handy. It's just a matter of knowing, is it something that should be considered, or is it not something that you're comfortable with? But they are out there, and they're getting much more prevalent because there are ways to prove safety and soundness for investment properties and larger numbers of units than would typically be financed on the residential side of things.
And I think people are they're expanding their understanding of what it takes to be able to pay for a mortgage. We talked about debt to income ratio in the past a little bit. And that's a standard that's been set up for several years about how people can qualify for a loan. However, your debt to income ratio could be horrible and you could still be making your payments fine and really be able to qualify easily. Or your debt service or your debt to income ratio could be really good and you might still be struggling. So there's debt to income ratio is a good way to make everyone kind of play by the same rules. But these bank statement loans, if you can show you've got money coming in, if you end up writing it all off on your tax returns, you still have that money coming in. And so banks get that and they want to be able to give you a loan for that.
Yep. As long as it makes sense. I mean, really, whoever's lending you money, they want the money back. They don't want the property. That's the last thing they want. That collateral's there as an, oh crap, we're in trouble. We're going to try and save some of our investment. But, they're going to take probably a 40 to 50% haircut off of that value of the property. And so every lender across the board, and it's hard to say always and never. I don't like always and never. But no lender wants that property. They want their money. They want the interest and the payments, and they want you to continue that so they're not going to take a loss or a headache. You have to basically, foreclosure is a lawsuit. You got to pay for that. That's expensive. So nobody wants that.
Yep. So I think a few actionable takeaways today. First off, get your ducks in a row early. So we've talked a little bit about some of the documentation and stuff. My customer had in that specific scenario. He was able to pull through with, hey, I need this additional form, or I need this K1, or I need some of these things. So some stuff like that, it's making sure you've got all your stuff organized. Make sure you've got open communication with your CPA. That's another hard part is sometimes your CPA is really busy if we're trying to do this around the springtime because that's when they're in their busy season. So making sure to have those things lined up in order before you reach out. Talking to a loan officer who understands what they're doing. I've talked to too many people that have said, well, the loan officer never asked me for my tax returns, but I'm self-employed. So we need to make sure that we understand everything and talk to somebody who actually understands it and gets it. And if you think, hey, this doesn't seem right, maybe ask a question. Well, what about my income? Or should I talk to somebody else? And then finally, just keeping your financials consistent. I know as a self-employed buyer, it's really easy to say, this year I was thinking I'm going to start writing off depreciation, or I'm going to start writing off all my meals. I'm just going to go ham on getting as many customer events going on, and I'm just going to spend a ton of money for dinners. I'm going to write all that stuff off. Well, those things have implications on your taxes. So just trying to be consistent from year to year, filing your taxes the same way. I understand sometimes we've seen several people that have gone from a Schedule C to an S Corp, for example, where they file their taxes as a small business, and the next year it's okay. Well, I need that tax benefit of being under a corporation. That's totally doable. That's totally fine. It's not a big deal, but it's just having that consistency from year to year and keeping the same ownership percentages and things like that.
Yep. And if you're going to make the changes, talk about it early. Because that's the accountant's trying to help you save on taxes, and we're all for it. We don't want to see you pay any more in tax than you have to, but there's a happy median. If you want to expand, you want to buy something, you've got to show the income to get approved. So again, it's those conversations. Having good professionals on your side, that way it's not stressful.
So let's wrap it up. If you're self-employed and thinking about buying a home, it's 100% easy or doable. It's 100% possible. No, it may not be easy, but we promise we'll hold your hand, get you through it. It's a little different than a normal process for someone who's maybe W-2'd, but that doesn't necessarily mean that you can't buy a house and you shouldn't. So we hope you enjoyed this conversation and found it valuable today. Be sure to follow us on social media platforms and then subscribe to the podcast for more exciting episodes. And remember, stay curious. We'll see you next week on The Lofty Lender. See ya.